Hey, Clint Butler here, and this is a stock market pattern analysis. And what I did was pick a stock that A wasn't terribly expensive, and B is moving up and down enough for you to make a lot of money. Well, make money without risking losing your shirt, and you're not going to have to invest in, you know, one stock costs $300 kind of thing. It's relatively cheap price for a stock in general. And the stock that I chose is Advanced Micro Devices. Stock ticker is AMD. Now, AMD designs and integrates technology for personal computers, game consoles, cloud servers, etc. They were founded in 1969. They went public in 1972, and they were first listed in 1985 as a Fortune 500 company. Some of the recent news from this year is they're announcing, first GPU-based Polaris architecture for the graphics card. They acquired another company developing PC gaming technologies, and Microsoft announced a partnership for two new game consoles with them, which is really, really good for AMD and shows continued business development. Some important indicators are actually to look at some of the graphs. And if you look at the rise and fall of the prices as they go along, we can see that AMD has a steady interest. This is throughout the entire year of 2016 to this point. And it maintains in a relatively steady pattern that investors can use to make buying and selling decisions. And it also shows that this has been and will probably remain something that investors will continually be interested in. Thus, a steady price rise and fall, which can help you choose better points in which to buy and sell the stock. When you're looking for whale tracks, we can see at the points of the arrow where the price was lowered and then selling came in and raised the price up significantly in line with the bar graph. And then as the price dropped or increased over here, you see the selling began, which resulted in a price drop, and then the whales came back in, reinvested again, and sold, reinvested, and sold, so on and so forth. So this is a really good indicator for us. So if we're investing in it, we buy in here, here, potentially here, wait for the second um, tower showing the increase in price, sell before it dropped here on the third, which is a pattern is pretty much the same here and here. They were holding it long enough for two of the indicators to show up, and then they were selling, so you would want to get rid of it here, 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 or here. Support risk resistance levels. We use this calculator. This is for today, the 21st of August. So the high today was 8, and the low was 722, and the close at 764. Here's our resistance level. R3 is 8.8, R4, R1, and you can see the pivot is 762. When we look at it in a graph, you can see it here. 762 is the pivot point, is determined by our graph, and then the high and lows are indicated here. And this is, as you can see, just for today, what the price was doing: selling, dropping, going up, going down, up, down, down, up, etc. Throughout the day, with that mean of 762. So look at a Bollinger Band. Obviously, it's been consistently on the rise since April 25th. It's gone up, some slight down curves. However, on the rise, never going towards the bottom band, which is where if the videos that we've seen that were provided to us would say we'd actually want to do against the grain, is we wait till it gets closer to that bottom band, then we buy and then sell towards the top, versus conventional wisdom is saying if it's going down here, get rid of it and buy it as it's going up here, as you can see the rise. So for an investment point of view. And then we can see that the indicator is showing us these bands are coming closer together, which to me would following the patterns here and here is meaning we're going to see either a rise, a continuing rise in the prices. So if we buy now, we can expect a little bit of a bump in our prices closer to the 8, probably over 8, and then a drop right after that. Here's another look at a Bollinger Band. It's just a different tool that provided it to us. Again, there's the mean, and then what we're looking at is the bands closing in together. Prices are increasing, so we expect that again to go up. And then when we're making our buy or hold decisions, since we're expecting that to go up at this time, if we don't have it already, I'd actually not buy this. If you have it, I would sell it on the next, probably tomorrow, because this is 1 year trading, but I'd sell it tomorrow and then wait for another significant drop according to the bands here, and then buy it right before that expected increase. So we watch the Bollinger Band and see when they're actually spreading apart again, and then the price is closer to the bottom band, and then we move up and purchase. What I think the future holds is we're going to use the same graph again. I think this price is going to go up, and then it's going to do what it did here. It'll go up and then drop significantly, and then get a little bit more up again, and then drop some more. Another whale investor will come in and raise that price up, and then we just continue and follow that pattern on and on. Expect it to go above 8 within the next couple days, which is good if you're using this for an investment option. And you can see that again here in this pattern. Price goes up, there's a slight drop, stays steady, goes up, drop, up, drop, up. We're at a price point. I'd wait for the drop again, pick it up when it drops, and then ride the increase in price point. So I hope this is helpful. Again, I would choose to hold off on AMD for a few more days, wait for the drop in the price that has consistently happened within the patterns, and then purchase this stock. Thank you very much. Here's the resources that I used to create this presentation, and I hope you find it helpful.